Lucid rallied over 100% on buyout rumors on Friday. You can see right here is where my resistance level is. You can actually see the little alarm I have sent on the system. Purpose of this is to understand what the heck is going on out there. Now, we're going to go through 10 names today that I think are really important to watch for next week. We need to focus on Tesla and what happened on Friday and why it actually has nothing to do with the company in and of itself. We are going to drill into the semiconductor space and look for opportunity. And of course, we have to drill into the Fed meeting, what to look for, and how the raise in interest rates is going to affect the broader market. Make sure you subscribe to this channel, click all notifications for updates and alerts on what's going on in the market. Everything we put out is timely, very different than how I see the majority of people putting out information. We deal with actionable ideas. We deal with what is actually transpiring here. I give my opinion on what is going on. You can agree or disagree, but at least it gives you food for thought. So if that is of interest, subscribe. Now, Tesla is obviously setting up for a possible test of this break line. This is really the neckline that Tesla broke. And we can all see that line pretty clearly. We've consistently tried to hold that line, and then when it broke, that was really the end of it. Now, the line that I have in here is just a very simple 22 EMA. It's in black. I'm trying to keep it streamlined here so that people can kind of follow along and not have too many different indicators going on, and then I'm going to pop them in at different times. Feel free to comment on that. I kind of like it. I like how smooth it is. One of the comments was to get rid of the grids, and that's exactly what we did. We got rid of the grids. It was a good idea, and so I appreciate the comments, and I do respond, but one-man show, so it takes a little time. If we just take a look at this neckline, there's very little reason to assume that it can't go there, but we started seeing issues earlier on, and if you go back and look at last Saturday's video or the Saturday video before that, we put one of these out every Saturday. They're kind of like a week ahead video, what to focus on, or what at least some of the things I'm focused on. Now, we talked about this, and we talked about these dojis that are just sitting right in this range, and that's all they're doing. They're just sitting right in here. Long wicks are price rejection. When you see this, you need to start paying attention. Doesn't mean it's going to do what it's going to do. Doesn't mean it's going to reverse, but this is a place of interest when you start seeing this, right? Because you're having a battle going on, and the tighter the battle, bigger the move. This could be up obviously because of their quarter, and I do think there was a lot of misunderstanding about why they were cutting pricing. And he did a very good job, him being Elon, did a very good job explaining why they lowered prices. And they lowered prices to gain market share. And I found that interesting, and they are moving towards a cheaper and cheaper car. Now, that's pretty impressive, and I thought the quarter overall was pretty impressive, and I'm not the only one. Morgan Stanley was out ahead of the earnings, stating that it is their top pick. Goldman Sachs is talking about Tesla rallying significantly and the three positives after earnings. Research report, institutional support, squeezing shorts, all of these can add to the stock, obviously pushing higher. Now, there are some other levels before we could get up here, right? Not roughly the 207, 208 range, but there are other things that we need to look at as to why Tesla can be moving and why this move is sustainable. In front of me is an actively managed ETF. This ETF is short a considerable amount of Tesla. They borrowed money to the tune of about 150% roughly of assets, and they have short positions. Their largest short position is Tesla. They're on margin and they are short. The size of the position is roughly around 42%. As NOPE drops, their collateral drops. As their collateral drops, the margin requirements increase. Therefore, the banks or prime brokerage must go out there and create a margin call. They have to meet that margin call either with money or by selling stock. So this becomes a self-fulfilling prophecy when they're locked in like this. And they're stuck. It's very clear you're starting to see these gaps down. They made a bet and the bet did not work, and it's short and it's on margin. So this has major issues. Nope. And I know people seeing the cracks here, thinking that maybe this is over. Eventually, he's going to have to unwind this. He's not going to have a choice. So I do think that if you're looking for some kind of short, any rally into this is probably going to be a good spot to look at shorting. I'd like for it to get up to that 15. Now, what we're starting to see is what I think is going to be a waterfall effect. Just so you can see where we are, here's the 200-day moving average. There's the 55-day moving average. The importance of understanding this is it just gives us a sense of where we are. Again, just comment on this. I like keeping the one black line up. I just think it makes it easier for us to focus. So for right now, we're just going to leave this 55 up. So now we can see that we are are above the 55, and we can see that this has not happened since September. Now, for those that are short this is going to be a trigger for them. If they are swing trade short, this is going to be a trigger for them to realize they're on the wrong side. One of the processes that I use for longer term trades is any touch or close above the 55, and we're staring at it. So you're going to see pressure on this name. Does not mean it's going to go straight up, but you're going to see pressure on this name due to the fact that you have this outstanding issue where they're getting margin called. And that means that everybody else is going to want to get out of the way. When we drill into the weekly, our resistance level gets even more and more prevalent. So I do think we're going to see this 207, 208. I do think we see a test of it. I don't know if we break the, huge head and shoulders. And quite frankly, nobody knows. What we're trying to do here is assign probabilities to things that are going to happen. And I really should probably get that point out there. If you're listening to somebody or you're following somebody and they're telling you that the market hasn't hit its lows or bonds haven't hit their lows or things along those lines, or they're telling you exactly what's going to happen and why, chances are they're an economist and they're not a trader, because traders work on assigning probabilities, and that's all I do. I assign probabilities. They're either right or they're wrong, and I move on. And the goal is to be right more than you are wrong. That's simple. So you're going to trade up to this level, and then we're going to just kind of watch how we act at this level. Okay. And I do think that we're going to get there. Now, this is Lucid, and I want to preface this. Anything could happen. Could Saudi Arabia come out and spend more money and buy this company? Absolutely. Are they going to come out and buy it when they're up in their initial position from where they were a month ago? Probably not. They're probably not going to increase their position. Now, maybe they have an offer down here. Maybe they don't. We really don't know. But let's go on the premise that this is nonsense, that they're not going to buy the company. And I'll tell you why I don't think they will. They want liquidity. So in other words, they had stakes in companies like AMD years and years ago, before we had huge moves. So when I say years ago, they had stakes back here when nobody wanted to go near it. And they easily could have taken this company private, and they could have owned AMD. And they didn't. All they did was accumulate because they wanted the liquidity so that when this happens, that they're able to get out of it. They're very long-term thinkers. They're not out there for a day trying to get a couple quarters of earnings. They're trying to build positions in things that can go out 5, 10 years. You may remember Norwegian Cruise Line and what happened during the pandemic. And you may remember that they took positions not only in Norwegian Cruise, but they also took positions in CCL, RCL, and they took major positions in these names. They're not getting out of them when they're running up like this. What they're trying to do is look out 5 or 10 years and go, is this something that I want to buy and hold? And then what happens is, as you get liquidity, they will reduce into the liquidity and make a multiple on their money. If you took the entire company private, then you would have to take it public again, or you would have to sell it to somebody. And that becomes a whole other can of worms, because there's not that many people that can buy something at a multiple that have that kind of money that Saudi Arabia has. I don't think that it's viable. Now, anything could happen, and I'm going to preface this. I'm short the stock, and I shorted it on Friday on this rally. I do think this Lucid squeeze can absolutely add to the pressure of what's going on in Tesla in the EV space, because everybody has this short on. To me, this is one of the easiest shorts in the world, right? These companies are bleeding money, and we're no longer in a zero interest rate environment. Now, this is the Fed funds rate. And if you go back to these periods in time and you see how we rallied and how we ran up, there's a really good book out called The Hedge Fund Edge. If you're interested in learning, I would get the book by a guy that's a trader you've never heard of, extremely successful trader, worth your time. He will explain in greater detail some of these percentages. For example, he'll explain why when you're starting to see everyone put this graph out there that says, oh, when the Fed pivots, it's bad. Best thing about when the Fed pivots is that it's not bad. If you drill out on anything on a monthly chart, you're going to look at it and think it's bad, but really not. And it gets into that and how to trade it. It makes a lot of sense. And quite frankly, it's worked. Probably one of the best books that I've read in over 20 years or 22 years now of trading. I'm a pretty big reader. Now, I'm just pointing this out. So you have 8 years of Fed funds at zero. What does that mean? You're like, okay, that's great, thanks. What that means is that if you're going to borrow money and you're going to get a mortgage, you're getting a mortgage at 2%, 3%. That's dead for the foreseeable future. So if Lucid needs to borrow money, Rivian, Tesla, Apple, they're not borrowing money at a zero interest rate anymore. They're going to have to tie it to what Fed funds is and the 10-year. So if you look at what happened over the course of from '04, really, and then the rally, and then you have this entire 8-year stretch from here. So then after the financial crisis from '08 on, which is a good, 12 years, 14 years, you have a position where you basically had zero interest rates. So anything that you wanted to try, you could try because the cost to borrow was so little. It's not the case now. To put it in context that people can understand, look at the mortgage rates. Okay, this is the 30-year mortgage rate. And I did highlight this earlier on why home builders are going to go higher. People argue that when interest rates go up or mortgage rates go up, that the home builders come in and they're going to get killed. So from 2003 to 2006, you can see that mortgage rates went up, not as precipitously as they have now. But they have gone up. And during that time, you had one of the greatest housing booms in the United States in its history. So the mortgage rate going up is not really a valid argument. It doesn't really hold a lot of weight to what it's going to do to the home builders. This means people are going to buy less house. And they can thank Powell for that. If you see these levels and you see how we're spiking up here, and you know that your mortgage rate was 7%, now it's 6%. But if you were going to buy that house down there and you wanted your McMansion, right, 2.9, you could afford it. Not so much up here. That's no different than companies like Lucid. In other words, Lucid needs to borrow money. I think it's projected they need to borrow $8 billion, or they're going to lose $8 billion over 3 years to create a car company. It's much harder to create a car company when your interest payments are going to be double digits, okay, versus when they're not. Now, they might take them private. That is a possibility. But bottom line is, I just don't see it. And it's not what they've done in the past. So that's what I'm going to go with. I have a short position on. The short position is hedged with calls, and I do have puts as well. Rivian is another name I'm short. I want to be really clear about this. If they squeeze Tesla and the problems from Nope come over, whoever has the same short thesis that I have, we're going to have a problem. Now, what I usually do with my larger short positions is I marry calls to them, and then I just let them play out, and then I'll move the calls out while the stock's spiking on me, and then I'll just let the short position continue its way back down, and then I'll find a spot to hedge them again, wash, rinse, repeat. That's what I tend to do and how I protect my risk. Rivian could absolutely break out and go against me and get right back to that neckline. I'm not so sure it does. Now, first thing is we'd have to watch that 2384, and that is your 55. And I just don't know that we're going to get there. I just don't see how we're actually going to get up to that level. So I like this as a short, and I would watch how it acts in here. It might take a couple more days for it to develop, be a real short, unless the news hits on Lucid that it's all just nonsense. Obviously, the company's not going to comment on it. I can't imagine what benefit Saudi Arabia has to comment on it, since their investment just went up dramatically. So I'm not so sure that we're going to see comments, and I don't think they really, care how it affects the world. So keep that in mind. But I would be leaning towards shorting Lucid. I'd be leaning towards shorting Rivian. I do think that the problem with Tesla is very different, and I do think that Nope has problems. So really, between Nope, Rivian, and Lucid are really three ideas that I'm looking at being short and at the same time being long Tesla. Now, when you start going through Nope's top 5 holdings, I know people are looking at this and saying, well, Nope's a really small company. It's not like it's this billion-dollar hedge fund. A ripple in a pebble in a lake has a lot of effects. This is how it starts. Maybe it continues, maybe it doesn't. But we can't just rule it out because it's only a company with a couple $100 million in assets that are levered, right? It's roughly around there. When you start figuring out the margin and everything else and how much rehypothecation is going on, how much money they're tying up. But we look at something like ARK and we look at these levels. Is there anything really redeeming about this? No, there's really not. There's a couple things out there that are very interesting. You have this downward trend line right here, and you can see how we're holding that downward trend line. Move this up a little bit, up this way. When you have this downward trend line, you see how we're reacting. Are we going to flip, or are we going to have a triple top? We just don't know. We just don't know what's going to happen here. I will say that this move is based upon Tesla. If Tesla keeps pushing, this is going to go higher. If this goes higher, it's going to create more margin problems for that company Nope and other people that are short, and then this will go higher. It's just moving as a function of supply and demand. It's not moving because her ideas are the best. So just keep that in mind. Caterpillar has earnings Tuesday, January 23rd, looking for $4, 15.82. Caterpillar is picked by Goldman as the #1 stock to beat earnings expectations. Something we need to really watch here. Now, if we look at this on a monthly, we can see that Caterpillar is breaking out of all-time highs, going into earnings. So what we're going to try and what we're going to hope for is to get up and in this trade and then go from there and then see how it does. Now, if it comes back and retests before it goes, that would be great. I'm not sure that we're going to get that opportunity or not. This is definitely on my radar for next week. Now, I usually don't trade these little guys, but there's something really interesting going on here where, for whatever reason, they're not disclosing the full short position. I can't find the full short position when I start going through short squeeze data. So this guy might be on to something here, meaning the CEO and what he's talking about with the naked shorts. He might not just be out there trying to get conversation for the company, right? And get somebody to squeeze it like maybe that happened back here. What we're getting at is that this is setting up a little bit. So you have a little bit of a line right here. Let's draw into an hourly. It'll be cleaner. This is GNS on an hourly chart. And we're just going to show you what I think are pretty much the obvious. So you have a line right here, that 312, whatever's going down in this range. We just have Wick City, as we all are aware. Wicks are price rejection, right? We can all see the top of this and we all know that we're up here. But if we just kind of take a look at this and go, well, what's really going on here? To start, we just kind of come down, take a look, an hourly little flip right there, don't we? So in other words, we got to support, we tested, and then we reversed off that 312 line, and then we ran up for the next couple hours. I think that's pretty pivotal. Again, anything could happen. They could come out with a secondary. It's one of the reasons why I'm not really crazy about these names. Even the CEO said we're not going to do a secondary. He's going to do whatever is in the best interest of his company. Now, you did try to get through the top of this red candle a couple times, and all of them failed. In other words, you never really made a higher high, did you? You flipped, but an hour later, you were back below it. You flipped like you were going to go. They pulled the flim flam, and then you're back down. So you want to watch that. You can see that 3-bar pattern that we trade patently right over here, right? 1, 2, 3, and then it breaks, and then it goes. So here's that wedge line. This is what I refer to as a kill zone. And you can see how we broke out of that kill zone, and then we're going to go up, and we're going to get to that 518. I think that this is very doable. So to start with, these would be the levels that I would watch over here. You can screenshot that. Now, should this break out of this, and this is a very interesting pattern. I'm going to go through that pattern and explain to you in a moment. Then you'd be looking at 736, and then you would just be walking yourself up $10. You can see up here, you see these levels. I'd actually use the top of that bar right there, because that was your open. So you could see that the 980, and you have a little bit over here too, right? That reversal right in there. So got a little bit of a wall if it could get up there. Now that'd be a monster move and everyone should do very well with it, but let's just identify this pattern so that you can see it. So what they do is you take that low, and that low is 310, and then you can see right here where you just undercut it or come so close that you're going to undercut it, right? What that does is that gives you that sense that you're going to break down. And then what you did was you actually opened below the close just enough to scare people. And then what happened at the end of the day? You basically enveloped this bar. Now, it's not a bullish engulfing because you didn't really engulf the full body, right? You never made it and never closed over here. And we know wicks are price rejections. We have to respect that. This is a piercing pattern. And when you have a pattern where you either open or the low is below the previous bar, and then you move up 50% in the opposite direction, it's a piercing pattern. It's really that simple. It can signify a reversal in trend. That's what's so fascinating to me about this. It's one of the reasons why I love the stock market, because it's just pattern recognition. And when you get that, it doesn't matter if you're trading buggy whips or futures. Anyway, you can see these levels right here, and if you can get above that 423, I think you can push to that 518. In regards to the SOX and Semiconductor Index, left shoulder, head, right shoulder, neckline going straight across. We can all see this, right? Tries, bonks, lower high, flips, goes. This is a 55 EMA in black. Again, I'm going to try to keep the one line in. If you could just comment on that and just let me know what you think. I kind of like just keeping that one line there. I think it's a great way to do this. Now, there's our range. Now we're breaking out of that range. This is not debatable. It's not open to debate on what's going on. This is what's happening. You can think that we're going to come right back down, and you might be right. But for now, we're breaking out, and there's a couple DTLs here. DTL stands for downward trend line. So that's your minor DTL. Your major DTL is going to come from where? The peak, right? So then you kind of look at this and go, okay, well, that's interesting, isn't it? Because these levels do become support and resistance sometimes. And you can see right in here how you held right in that area. And then what did you do? You held. That's kind of interesting. I think it's interesting. I'll leave it at that. So then you come back down here, you test that level, and then you flip, and then you move higher. Okay, well then you have to start, when you flip one, you have to go look, am I flipping another? Well, here's another one. I'm glad you asked. So there's your third one right in here. So you'll see this fan pattern that people talk about all the time. The fan is real. So the more of these that you flip, the stronger that it gets. And think about it this way, right? Think of it, if you only think about technical analysis as a self-fulfilling prophecy, if I flip this one, I'm going to get buyers. So I got some buyers in here, but then you have more naysayers, right? Then you flip another one, and then you get more buyers, right? And you have less naysayers. And then you flip another one, and then after a while, it's going to spike up before the last person throws in the proverbial towel. So I think that's really important to understand. Now, there are a myriad of names that we're looking at in our community. So the one that we did in Alpha Chasers last week was Nvidia, and we've done exceptionally well with it. And we still have it. Now, we did well enough that I felt the need to take money off. We've got I just want to preface that for people that don't get the newsletter and that aren't in the community, because we did get a little frothy on Friday with the EVs, and that scared me. But I'm going to show you a couple indicators that are telling me that we're just not there yet. We could be getting there to a little bit of froth. And all that means is that we pull back, but we'll address that with the indexes. So here we go, and we come straight across, and now you're breaking up. Do not rule this out. You can even see the 200, right? Tries to get over, can't. Tries to get over, gets over. This is actually even starting to curl up. If you look at the 55 SMA and you see what's going on here, when was the last time since 2022 that we moved like this, that we had this angle? And this is why I get frustrated when I see people say, oh, the lows aren't in yet, we're definitely going to go lower. Read the room and read what's happening. You can see that really clearly that people are buying. It's glaring. So now we have stocks that are in a 9 or 10 month base. You can either believe it or you can watch them go up. That's going to be your choice. And I hate to be that emphatic with it, but I don't know how anyone's going to look at this and say we're going down. Now, the RSI is getting overbought. There's some indicators there that we could come back in, but just don't rule these trades out. Now, just to hammer home how significant this line is, you can see right in here back in 21 how it became support a little bit before getting this monster run that we got. We're now back over it for the first time since we broke in April, and that's 194.05. You might want to mark that level down, because that would be where you might see a massive retest, and that might provide an opportunity for us to get in. This is natural gas. Technically, from my standpoint, there is nothing that I'm going to look at on a weekly basis and be pounding the table on. But I'm getting a reading down here on true rules. So this is full rules on DeMark. Not everybody uses the full rules. They use like a scaled down version of it, which I always find fascinating. If someone comes up with a system, you might want to follow the exact system, not try to change it. So here is a buy combo countdown that's going on right in this level. I find it very interesting that you're there and you're getting to the bottom in this, and this is where a lot of these buy signals started to go off before. You had a buy down here, okay, and you're setting up. See the countdown, how the countdown's starting, right? This one they're calling a combo countdown. This one's an aggressive countdown. You have to, there's several books to really understand the system, but it's pretty fascinating stuff, and it really just usually shows points of exhaustion. And then the green are going to be levels where you either have support or resistance, and you can see how that's acting in here and how it acted in here. They're more of ranges than anything else, but I do want to throw this out there because I did find this fascinating. So I'm going to leave this in for a moment here, because you can see how there's a countdown right here, and then you can see this where it's going to say countdown recycled. Again, there's a lot to this system, and you're really going to have to drill into it to learn it. The reason that I'm showing it is just so you can see that there is the possibility that this is getting exhausted. Just because natural gas is imploding because we had a warm winter, that does not mean that you're not going to get the demand cycle again going into the spring. So I understand why people are playing it, and I understand why people are looking at it. Technically speaking, there is nothing redeeming about this. You can look at this level here and you see this little flip. Just keep it on your radar. So this is pretty well overdone. And if productivity does pick up as it's starting to show, then this is definitely something you want to pay attention to. The best time to build positions in these levered ETFs is when nobody wants them, like oil. It's the best time. It's not when they're up here, right? It's when they're down here and you have these smaller bars. And we all know what these smaller bars mean. They mean that you're probably setting up for some kind of change eventually, right? So when things get that tight, that's usually what happens here. When you get this tight over and over again with smaller bars, eventually you start getting what? Longer bars. When you start getting massively longer bars, it means change in trend. And then you go back to what? Smaller bars. Not rocket science. So let's talk about the Fed. Let's talk about why I don't think that we are overbought or oversold. But you do have some issues out here. So this week, Tuesday, Wednesday, we have a Fed meeting. Anything over 50 basis points and the market sells down. It's really that simple. Anything over 50 basis points and the market sells down. We could see Monday, Tuesday being somewhat sluggish as we wait for the news. If they do 25 basis points, the market's going to rip, okay? And because that is not factored in at all, in my opinion. I'm not going to sit here and go through all the Fed funds numbers. There's other people that will do that and speculate. I'm just going to tell you that if you do 25 basis points, you're probably going to see at least a 2% move higher, okay? And if you see 50, I still think we might see a little bit of a move higher, but not as much. Then we're going to have to go look at his comments. I do feel that if we do anything over 50, which I do not believe he's going to do, and there's a couple reasons for that. You're hitting a point here with the federal debt limit and the interest payments that every time you hike rates, you're increasing the debt load. At some point, we're going to have an issue. You just can't keep doing that and increasing debt. It works in a zero interest rate environment as we walked through earlier, but not here. So I would watch this level. I think this level is absolutely glaring. I'm going to use the futures market here so that you can get a real clear view of this because it's all continuous. So if you take a look at how we came right back down, flipped, we're doing okay here. You're seeing dip buying. Make this a 20 EMA, and you can see what's going on here, and you can see the flips of that 20 EMA, and you can basically do that all day long, right? Now, drill into this a little bit more. All right, so we start looking at the 5-minute. You can start seeing some spots right in here. 10-minute and the levels start getting a little clearer. Now, if you look at the futures market, you can see this 4090, we're going to say 4100. It's just an area of contention. We've gotten over it. We've been unable to rally, unable to rally. And I'm not sure that they're going to get us over that on Monday before this meeting. And I'm not sure they're going to do it on Tuesday before the meeting. It very well could happen. We could, quote, have a leak, and that could happen. Overall, if you look at this, and you look at that 4100, if you're not watching this area, you're really missing out because that's pretty much what everybody's watching. And you can see why we rejected there 3 times. Now, I am not crazy about this from a futures perspective and from a technical perspective. I do not want to see a bearish engulfing at the top of a resistance point and think that I'm supposed to rush in. So Friday during the close, we started trimming some of the names. And this is one of the reasons why I don't really want to watch a bearish engulfing on a futures chart going into the weekend in a Fed meeting. Now, if you take a look at the SPX and you see how this is playing out and you see our levels, you might say, oh, well, we might be a little frothy up here. So this is stocks above the 50-day moving average. These red arrows are when we were over that 85, 89 line. Sometimes we get into the 90s. And it only happens a couple times. Every single time that it's happened, it's resulted in a pullback. So I am watching that very closely, but we don't have a sign of that yet, do we? And that, I think that's interesting. Now, if you go take a look at the 20, you're in the same situation. Percentages of stocks above the 5. If you take a look here, every time you're above the orange line, it's been a sell. If you look at the index, and every time it's been below this 7 line, it's been a buy. And if you go correlate these numbers to the index itself, you'll see that. What we're having here is just a straight out 200-day moving average that is just coursing higher. Let's take a moment and just look at this so you can see the divergence. Here's the S&P in orange, and you can see the S&P, how you have a lower high, right? So you have a higher high here, higher high, lower high. It's a divergence, okay? And now you're breaking out. And at the same time you're breaking out, you're still not over it. So how are the majority of stocks going to get over their 200-day moving average and push and the index not go higher? It just doesn't make any sense. For our sake, we're going to leave this as the S&P in a blue line. And I just want to point this out. You are seeing the advanced decline line down here in the bottom, and you're seeing this peak. At the same time, you're seeing another peak that is lower, right? So that kind of makes sense that because the advanced decline line is starting to come in a little bit, that we're also coming in. Now the advanced decline line is breaking out. And at the same time, the advanced decline line is breaking out. We're not even over the previous high yet. So just from that alone, you can think that this is possible over time. And that is going to be extremely painful to people that perish. Does not mean that you never retest a low again, but if every stock starts structurally getting better, which the majority of them are, you're still going to have companies that are going to go out of business and struggle because of the zero interest rate environment. I just don't see how this is going down until the advanced decline line starts dropping and stocks above their 200-day moving average start dropping. I don't need to look at the dollar. We all know the dollar's plummeting. I don't need to look at the 10-year. I just look at the internals of the index right now. What's happening and what is most likely to happen is glaring. I hope you found this helpful. I went a little longer today. Please subscribe to the channel and click all notifications. I do appreciate when you like the video. It does help me great with the algorithm. I don't run ads on purpose, so I don't want to waste anybody's time, but it does help me and it does support the channel by doing it. If you want to continue to see the content, please consider doing that. Now, there is a wait list for the Alpha Chasers community. If you are interested in the Alpha Chasers community, the invitations for those that are on the wait list is going to go out this week. After that, it's going to be closed for an undisclosed period of time, even for those that are on the wait list. As things get a little more aggressive here on the market and they start looking, I need to be focused. So I keep that room relatively small on purpose. So just please keep that in mind. And if you just simply want to follow along, there is a link in description to do that. And there is a newsletter there where it goes out daily. I just revamped it so it hasn't been going out recently, but it will start going out again this weekend. And updates of these charts, updates of the ideas that are in these videos, it all correlates together. Hope you found this helpful. Everybody have a great weekend. Trade to win.